Hey everyone, now that we're coming to the end of the year, I thought I'd tackle some macro subjects and how things might play out in 2025. And the first topic is inflation. I had a call in like October, something like that, about inflation coming back. Initially, the market didn't react, and I thought that was early. Now the market has reacted, and with the recent spike in dollar and yields, and inflation expectations jumping higher is that expectation, even the Fed saying they won't cut further. And basically, this is the market's reactions to inflation coming back. This is inflation coming back. But the market is reflexive, meaning a certain outcome uh, becomes less likely the more the market thinks it will happen. So if the market thinks inflation is coming back, it means inflation is not coming back. If the consensus is inflation coming back, it's very unlikely that it will do that. And today's video is all about that and various things that we can look at to indicate this level. Now, this doesn't mean that short term we cannot have like another hot CPI print or something like that. But I'm talking throughout 2025, it is unlikely that inflation will be coming back in force unless something else happens. Based on what we know that now, it is unlikely to happen, and I will show why. First of all, this is DXI versus US CPI. This is US inflation rate year over year, and this is DXI. And you might say that when DXI went up, inflation went up, basically, or when inflation went up, DXI went up. And the second one is more correct. Because inflation went up, it caused a response in the market, which drove the dollar higher, which in turn brought inflation lower. And this becomes visible once we put a 6 month offset. This is a monthly chart, so we do a 6 month offset, and I will invert the inflation chart. And now, when we look at it like this, most likely uh, the the peak in inflation, let's do 8 months just to showcase it even better. So 8 months offset on inflation, another, let's do one full year. It will look the best. So basically, inflation peaked, then the dollar went up, and because the dollar went up, inflation started coming down. Not the only reason, but one of those reasons. Now, using this as a predictive method, we can see that dollar went up again. That means inflation pressure will be coming down. We likely have another couple of months of going a bit sideways, but this is not accurate. This is not an exact science. So the time offsets and the responses might be a bit different. But the point is, if the correlation stands, we are likely to see inflation falling over as we move in the future. And if you just for further convincing, this is what happened in 85, for example. Like this is the same chart. Inflation means here means weak dollar. The weaker dollar gets, the higher we go in inflation. And once the dollar starts going up, inflation comes down drastically. This is what has happened here. Like if we don't do any time offset, it looks like they move in sync, meaning because the dollar went up, inflation happened, but it's the other way around. Now, this is one aspect of it. The other is US's reliance on China, and there are some strange correlations between US inflation and stuff like not Asian currencies or Asian markets. A very strange one is the correlation with what was it with China mainland stocks. To be inverted anymore. So we keep the 1 year offset for this one, or 8 months. Anyway, it's pretty clear as well. This kind of predicts a spike. But on the other hand, we have the correlation with the Taiwanese dollar, which I will put on like a 6 months lag because it was the best, or 8 months lag, and invert again, something like this. Again, the correlation is very strong because Taiwan provides basically chips for all US manufacturing. And if the dollar is strong relative to the Taiwanese dollar, then it means you can buy more chips for the money. And that is good for the US. So if we follow this correlation, it would mean that inflation is going to go lower. And there are many things like this that we can look at. One contradiction that I couldn't reconcile until recently was the correlation with the stock market. And let's say, and we had this inflation spike here. Let's reduce the offset. Let's do 6 months just for the fun of it. Okay, 6 months. And again, as you can see, somewhat correlated. The question is, why hasn't this spike in the market caused a spike in inflation as well? It may very well do so at some point, and the answer I came up with is because the current market rally is more or less isolated into big tech. Like big tech is probably like 60-70% of this market rally. And we need to look at things differently. We need to look at relative performance. For example, this is equal weight SPX SPY versus equal weight SPY. And just like the other chart, let's do this one doesn't actually need any offset. Oh, sorry. In general, it's correlated. So basically, when the whole market does well, inflation goes up. Because when the whole market does well, uh, then it means that all companies are doing well. All companies are doing well means there is demand for their products. If there is demand for their products, they have pricing power. So generally speaking, when all companies do well, they can raise prices and consumers will continue buying their products. But because Mag 7 are not really customer oriented companies, with obviously some exceptions, but stuff like Microsoft, like Nvidia doesn't sell their AI chips to retail people, like to regular customers, like Apple sells phones to people. That's fine. If there is a drop in consumer demand, Apple will probably get hit. Amazon will probably get hit. But Nvidia wouldn't get hit because they sell to institutional investors, or not investors, business to business. Same with Microsoft. Microsoft has a ton of business customers and so on. So not only are these companies more isolated from the consumer, most likely most of their selling is business to business, and because they sell to each other, like Microsoft is the biggest customer for Nvidia, stuff like that, then they are not hit as much by a weakening consumer. But the rest of the economy is kind of getting hit by a weaker consumer. And we see this in the relative performance of equal weight versus non-equal weight, where the mega caps make up a big part of the market. And if we apply this to this chart, then what is inflation going to do? It's going to go even lower because companies are doing worse. Another example of this is uh, why did inflation happen? And we have two reasons. One is the pandemic response, and this one we see in the market as well. Basically, the market will tell us about the inflation waves, and I'll go on the daily to show this. We have this leg of the market. This was up until here, this leg of the market. And this was the pandemic response, like printing money and flooding the market with money in a context in which we cut off production because people were staying at home, and this caused an imbalance in supply and demand. Basically, a lot of demand and very little supply because we weren't producing stuff anymore. The entire world wasn't producing stuff. So even if you had money, you couldn't get it if you wanted. And the second leg, which started around here, this second leg here, was the supply shock from the war in Ukraine. And this caused an energy explosion and so on. And the point I'm going to come now is XLE, and we go back to the monthly chart. Like from this chart, you would say that, okay, XLE hasn't cratered. It means inflation must be coming down, going back up, sorry, not coming down, because in theory, we haven't had a correction. But again, the better way to look at this is through comparing it to uh, from a relative performance perspective. And when we look at XLE versus Pi, again, no need to do any offset. I mean, we could do like a small one, like +2, let's say, to make it fit better. Just to 6. But again, doesn't matter that much. So I'll stop doing it. But from a relative performance standpoint, where is the shock in energy? Where is the shock in basic stuff that will make things go higher? And when we look at this as well, this is XBI. XBI on SPY, again, cratered. XLV, healthcare versus SPY, cratered. Utilities. If you look at utilities, you will say another inflation leg is coming. But when you look at it like this, oh my God, we just had another leg up. We corrected, and now it looks like we're about to have another leg down. We have 10. The only one that actually went up, and the point I was making about mega caps and this mega cap driven is technology. So XLK is the only one that has gone up, not the only one, there are others as well, on a relative basis. So this one is the only one that overperforms by, not the only one, again. Even XLP, so consumer staples, it's cratered, and this means the market does not believe in these companies, basically. If the market does not believe in these companies, it has a reason not to. And most likely it will mean no pricing power. Uh, the only reason why XLI went up here is because of Tesla. So this is all Tesla, probably Amazon as well. We have industrials, same kind of thing. They did their leg up already. They even did a second one, and now we are near lows on a relative basis. Materials are cratering, energy has cratered, and so on. Real estate, this is telecommunication, XLC. And again, this is like this because it contains some of the big names like Google, like Amazon, stuff like that. Even banking, like nothing really scary. ARK, small bump because of Tesla here. And the other one that overperformed is semis. But semis don't impact prices. Like you don't buy semis directly as a consumer. So it's not seen in CPI. What we do see is companies raising prices. But the biggest pricing power we have seen is not with small companies, or not small. When I say Coca-Cola is not a small company, but it hasn't been with Coca-Cola. Like we have seen Netflix hike prices a million times. We have seen Google hike price of YouTube Premium. We have seen Spotify's rise prices, and so on and so on. So it's still the big names that have been performing well that rise prices, which as a percentage of your monthly spending are not that much. Like you don't have 10 streaming services. You probably have one or two or something like that. So we don't really care that much. And finally, it's also visible in QQQ versus Pi. Like QQQ has outperformed, but if we do the same with IWM, this has greatly underperformed. And I think this ratio is a much better predictor of minus 6, no, 12. This ratio is a much better predictor of inflation than SPY over QQQ. And even though you might, what made me believe initially was that correlation between inflation and SPY was actually wrong. And I think this is a lot more accurate, and we still have some deflation ahead of us. This would have happened anyway in time, but because the dollar went crazy right now and yields went crazy, it's it's going to prevent it from happening at all. So I think by March or something like that, we will have very cold CPI prints, especially because of the dollar spike right now. Now, the unknown here is what will tariffs do? And the high correlation uh, between Chinese equities and Taiwan, Japan, not that much, but uh, I would expect that if the tariffs go through and they are on China and they are on chips on Taiwan, then we will actually get inflation or anything that affects energy. If energy hasn't gone up, like the previous spike in inflation, -6, it might not need any offset at all. Yeah, this looks pretty fine. So where is the spike in commodities? Where is the spike in oil? Like it's not only oil, it's also copper. Like why aren't this going up if we we fear inflation? And keep in mind that like this spike here happened, but if we get over it without causing a move up, like for example here, like we had another spike, but we didn't see it in CPI, and copper is highly correlated with inflation. Then it we just skip it. Like this part here won't happen at all, or it's equivalent to this part here. And now copper is going down again. But the bigger one is oil, and we don't see a spike in oil. Where's the spike in oil to cause another spike in inflation? So if inflation is coming back, it will either be a stupid implementation of tariffs, which Trump might do, I don't know. But if tariffs don't happen, he just uses it for negotiations, like to put pressure on people and to actually do what he thinks they do, meaning negotiate, quote unquote, negotiate a better deal. If the tariffs don't fall through, or they are small, or they are insignificant, then nothing will happen. If there is no further wars to make the price of oil spike, then nothing happens. Like imagine if Iran falls. Iran is having problems with the energy right now, even though they produce oil, they don't have enough gas. It's a good opportunity for Israel to do some shit that makes Iran fall. Maybe we get this next year as well. Imagine maybe something like actually peace in Ukraine. This will absolutely tank oil. So where is this inflation supposed to come from now that we have already had a reaction against inflation? Like if yields remained like they went even lower, like instead of going higher here, we were at I'll cut this anyway, we don't need it anymore. So we were at 4, and instead of going to back to almost 5, we went to 3. If that would have happened, then inflation could have come back in force. But the market reacted, the Fed reacted, dollar reacted, and so on. And especially for the US, which sets the tone for the rest of the world, having a strong currency relative to Mexico, like this is USD versus Mexican peso, and it's at a multi-year high versus Brazil, multi-year high versus Euro, not the high, but it's almost at parity versus GDP, like zero point 0.8, again, a recent high versus China, near the all-time high. Yeah, near the all-time high versus JPI, near the not the all-time high, but near the local high, and so on, versus Canada. near the all-time high, and so on and so on. Versus India at the all-time high. I'll do monthly to actually see it. So versus India all-time high, versus Taiwanese dollar at the recent high, and so on. Versus AUD at the recent high. So all of these things say that inflation is not coming back unless something else happens, something bad. But for now, uh, most likely TLT is still a good play, a much better play at these levels, obviously. I will wait another day or two and probably go all in on TLT because of this thesis and market reaction. And I expect that by March we will see very soft inflation prints and the market will realize its mistake. The Fed will continue cutting, and I expect a full 100 BP cuts by end of the year at a minimum. This, if nothing breaks. If something breaks, obviously things are going to get a lot worse, and maybe like we see 2% Fed rate by end of year. So yeah, that's it for the inflation expectations. Have a good one. Bye bye.